My name is Fredrick Wang'oma, the General Manager Mwananchi Credit Limited. Mwananchi has a history of strong growth. Currently, we are the fastest growing microfinance company in Kenya. That is thanks to God and our hard work. And this has come because of the team that has been built by the shareholders and the board of directors to make this growth possible. Our first loan that was lent out was 30,000, which was our entire float back then. And currently, as we speak, we lend up to 25 million to a single counterparty. When you talk about microfinance space and market share, Mwananchi is right on top of the market share. We have a foothold across the country, and currently we are the leading microfinance in the company. So our market share is on top, around 10% of the market share. When the company started out, we weren't doing logbook loans. We are doing unsecured lending, which means you are simply giving small startups, the mama mbogas, kiosks that you know about, the boutiques, unsecured loans. So we were able to invest in these businesses and make them grow to a point where they were able to acquire motor vehicles. So it is the feedback that we got from these customers that now they had motor vehicles that they could use as security and get more loans. That is what informed our decision to get into logbook lending. Most of the customers or most of the clients in Kenya, the first assets they own are motor vehicles. So these are the same assets that they can use to leverage on, and they came to Mwananchi and we've been giving them loans against their motor vehicles. We are also helping other Kenyans who are not currently owning motor vehicles to own motor vehicles through asset financing products, which currently we are priding ourselves to be having one of the lowest interest rates in the industry. There has been an exponential growth of imports of motor vehicles into the country for the last 10 years. Year on year, we witnessed an increase in motor vehicles being imported, and the country also has witnessed an increase in the number of local assemblies. So that tells you that there is huge demand for motor vehicles, both the imported and the locally assembled. So the numbers have been rising every year. So this is what the company has been tapping into and getting a chunk of that business, because we do different logbook-based products around motor vehicles. COVID-19 has affected every single person in Kenya and the world at large. And COVID-19 has especially hurt our customers the most. We took this opportunity to support our customers more during this challenging period. We have been able to do loan restructures during this period. We have been able to give our customers repayment moratoriums and interest moratoriums during this period. We have also waived penalties on our loans during this period. And most importantly, we slowed down our repossession of motor vehicles for the clients who fell in default during this period, more so the ones whose default was occasioned by the hardships brought about by coronavirus. When the waiver campaign or the COVID support was announced by the company, our customers were encouraged to visit their branches and apply for the waiver support. All our branches received requests, and you can say up to 60% of our portfolio was restructured during COVID period, and we are able to support these customers. We are taking this as an opportunity to support our customers when they needed the support the most. There is this say that lenders will always give you an umbrella when it is sunny, and when it starts raining, they ask you to give back the umbrella. We are not in that bracket. So we are actually supporting our customers during this period when they needed financing, because lives have to continue, and part of that includes financing for planning their business and their lives. What we have learned during the pandemic, when most lenders slowed down and Mwananchi was actively lending, we acquired some customers who are now very loyal, and they are now forming our foundation and our base as we keep growing and expanding our business. So we were supporting them when the other lenders could not support them, and now they are with us as loyal customers of the business. The microcredit sector has claimed its role and has gone to the forefront of lending space in Kenya, because back then there was a time that the only people who could get loans were those who were employed in big corporates or earning big salaries, or those who had big businesses. But thanks to the microcredit sector, we have had an inclusion of giving other customers who could not get loans elsewhere. They now have a fallback. They can come to microfinances and get credit. So the microcredit space in Kenya is playing an important role that has been recognized by the country, and the industry is there to stay. On the policies, the current setup of the microfinance sector in Kenya is that the shareholders are lending their own personal funds. And that simply means that they're assuming all the risk that comes with the lending. And some of these customers that you lend to, you find that they can't qualify for loans elsewhere because of the high risk and lack of credit history. So we have to price for the high risk. And because we are mitigating our own funds to lend to customers, it is only fair that we self-regulate in a free market without regulation. Currently, that is how the policy is. There's no regulation, and we prefer it to stay that way. So most of the regulation that central bank gives applies mostly to the sector that is regulated, that is the banks, SACCOs, and also for other MFIs. As of now, we are not under any form of regulation. The microcredit industry leverages on the funds that are personal funds from the shareholders. And the customers that we lend to are customers that currently are not able to access financing from the mainstream financial institutions. This therefore means that they come at a higher risk, and we have to price for this high risk for us to stay afloat to remain as a going concern. So the pricing that we have is informed by the risk of the nature of our lending. At the inception of the industry, the rates back then were very high because there are very few players in the industry. But as we speak, there have been so many players who have gotten into micro lending, and that has played a role of bringing interest rates down due to forces of demand and supply. So currently, if you can check the rates that are being charged right now and the rates that were charged some years back, the rates have gone down. And as Mwananchi, as a company, we may not speak for other microfinances, but as Mwananchi, our rates currently are very competitive. And if you look at our asset financing, we are giving asset finance product at a rate of 1.6 per month, which is what is being charged by the mainstream commercial banks. And if you look at the entire industry rates, the APR for the industry has been coming down year on year. We have been able to succeed with the initiative on account of low interest rates. You find that we have other players in the industry whose rates are higher, and therefore customers who take loans in those institutions are not able to service those loans as per their terms. So these customers have found a safe haven with Mwananchi, whereby they bring their loans to us and we are able to now keep them as our customers. So we've seen great success with this initiative of buying loans from other players in the sector. Mwananchi Credit prides itself in lending the widest range of products within the industry. We don't just focus on logbook loans. We give loans that are secured against title deeds, and also we have a product where we are giving civil servants loans through checkoff and staff working for parastatals. So we introduced a product where we lengthen the repayment period, and this has helped us attract more customers and grow the product further. I think this is the fastest growing product as we speak in the country. The company embarked on an ambitious growth and expansion plan, and currently as we speak, we have spread out our branch networks across the country. We have 10 branches currently as we speak, with a customer base of 7,500 clients. Currently, we have covered 6 counties, and the plan is within the next 2 years to cover all the 47 counties in the country. You've been also witnessing numerous awards the company has been winning in the industry for good services. So this simply means that there will be people who will not be happy with this kind of growth, and therefore They'll be fabricating stories and also trying to put things out of context. If I go to the case you've just mentioned, this particular case is currently in court, and we may not want to prosecute it through the media. It's an active case in court that we will win because the case and the merit of the case is on the side of the company, because we gave this client a loan that had the terms, and the terms were not adhered to by the client. So that is the much you can say about this particular case, but it's a case that we are winning. As a company, we have a very strong anti-money laundering policy that we adhere to, and also we have one of the strongest policies against counter-terrorism financing, and we have a whole department that deals with that. We are not deposit taking. That means that we don't have any opportunity to get any of this illicit money getting into our company. We are a loans-only microfinance. We are lending our own funds. So when we lend our own funds, and they are very small size loans of $500,000, $1 million. So we are not currently recipients of any illicit financing as a company, and we have a strong department that vets our customers and ensures that all our customers are people of integrity, number one, and are people who are not involved in any illicit financing deals. We have very big plans for the company, not just to take deposits, but to grow into mainstream banking institution. So that is the overarching vision that the company has, that in the coming years we become a mainstream banking institution in the country that not just lends in the country, but also across the East African region. That is our long-term vision that is going to be achieved in the next coming few years. The industry that is microfinance industry is an industry that has to be supported because it is playing a key role in credit inclusion. We have so many Kenyans who have been successful in their businesses simply because they were able to get financing easily from microfinance industry. And as the saying goes, if it is working, why fix it? So this sector is working and helping people achieve their dreams. And as you know, our motto or our mantra is investing in people. We have been able to invest in thousands of businesses, and they are currently succeeding because of the partnership that they've been able to build with Mwananchi. What the Star newspaper and the rest of the country needs to do is to ensure that this industry is supported and it grows to its full potential.